Hello and welcome to That One Idea, a podcast series chronicling early-stage founder journeys brought to you by WaterBridge Ventures. Through this podcast series, we hope to bring out founder moments and journeys that led them to starting up. We highlight the humans behind the founders as they blitz through the 0 to 1 scale journey and transition their ideas into scale-worthy businesses. These conversations reveal the unique spirit and talent of these incredible founders as they share their vision of who they are and what they are building. In today's episode, we have Anjali Sosale, partner at WaterBridge, chatting with Tejas Jain, founder of BimaKavach. BimaKavach is disrupting the Indian general insurance industry with an MGA-like model which would enable them to customize and co-create policies with general insurers. BimaKavach can underwrite, price, and distribute insurance exclusively to small Indian businesses. This is a huge process improvement on the current alternates in the market, which typically involve weeks of offline back and forth with the broker or agent chasing them for quotations and being lost in a myriad of finely printed terms and conditions. More than 40% of India's GDP is contributed by MSMEs, but insurance penetration remains at around 1%. Distribution is dependent on local independent brokers and agents, and they currently account for over 50% of policies distributed in India, making the space ripe for a digitally driven online distribution model for business insurance. Hi Tejas, and welcome to season 2 of That One Idea, the exclusive podcast series from WaterBridge Studios right here in Bangalore. Welcome.
Hi, morning. Thanks for having me here.
Would love to start, and my favorite question always to start these podcasts is, where were you born and raised? And tell us about who or what influenced you the most growing up.
So I was born in Bombay. Mom's from Bombay, but I've spent considerable time of my life pretty much from the cleanest city of the country, which is Indore. That's where my dad's family has been since probably, 50, 70 odd years. And that's where I have been for the last almost 25 plus years. And I love the city absolutely to my death. What influenced me to get into insurance? It's a fairly straightforward answer because I'm probably the 4th generation guy in the family who's been doing this now. My great-grandfather, grandfather, father all have been in different jobs, senior positions, LIC, GIC, both the industries I have seen. So while growing up, it was like a small boardroom meeting sort of a thing every day, be it in the morning, be it in the night, where my dad and my grandfather would sort of sit down and discuss their days. Because one was in life insurance, my grandfather, and my father was in the general insurance. He was a development officer for the central region primarily. So I think when you just hear these things day in, day out, there are a lot of things that you grasp unknowingly, knowingly, consciously, subconsciously. And probably, it just falls into pieces as things grow up. And I think it was the right time when we started BimaKavach. Insurance was something that is now at the helm of a lot of change. And we decided that, probably this is the best time to start up in this sector. And all of those boardroom meetings as a child is now helping me probably do what I'm doing on a daily basis.
Fantastic. And before we get into BimaKavach and how you actually started up, just sticking there to your childhood and your engineering days and all those breakfast and dinner table conversations, as you said, were always about insurance. The interesting thing was from your great-grandfather who was at Ruby to your grandfather who was at LIC to your father who served more than 3 decades with United India. They were all on the insurer side and not on the distribution or the broker or the agent side of things. Any interesting perspectives from that?
I think once I decided to probably get into this, the primary conversations that I had and the initial conversations that I had with my father were trying to figure out that what he has spent doing in the last 30 years of his career. And the theme was very central around the entire thing, primarily that nothing has changed in the last 30 years. They're still doing probably what they were doing 30 years back. It's just that maybe the business has grown to an extent as the economy has grown by a certain extent, but the ways that they functioned has seen no change. Post the privatization as well, the PSUs continue to be the way they are. Even today, they are functioning in a very similar way. And I think that the regulator was also not bringing in a lot of changes. Only now in the last 1-2 years post-pandemic, things have drastically changed. And that became a very central thought that how can an industry which is so significant globally, not change in the last 30 years where the entire world has probably gone from, the technology shift has happened. Like we are probably on WhatsApp day in, day out, but industry of the insurance remains to be the same. And that's what got me thinking that why is it that, it continues to be the same? Why is it that the insurers are not changing? Why is it that intermediaries are not forcing or trying to change how the insurers function and themselves as well? There have been some radical companies coming up using technology, using good distribution models. But why have insurance as a sector not picked up where banking was, lending was, and a bunch of other things? And that's how that, seed was planted that, probably there is a fundamental issue in the entire thing and somebody has to start thinking and addressing it. And that's how BimaKavach was also in principle.
Yeah. And I've known you for more than a year. I think from our first pitch to when we actually invested was more than like 12, 15 months. And naturally, even I think that you've always spoken the language of insurance. And like, as you rightly said, it was always insurance talk at home. So one would think it was inevitable for you to start up almost immediately in insurance post-engineering. But you had a little bit of a detour in between. You left Indore, came to Bangalore, and you wanted to do something in fashion e-commerce out of everything else. Tell us about that conversation about deciding to pack your bags and come to Bangalore. And firstly, why fashion e-commerce of everything else? Would you look back on it as more of a rebellious move just to get out of Indore? Or were you really, fatigued, if I may, about too much insurance talk at home?
I mean, there are two answers to this, to be very honest. You take things for granted, which you have back home, obviously, like it's just there. Insurance is there. It's like saying that, good food back home is there because mom is there. It's as simple as that. So it was not just a rebellious moment, but it was also a stint where I wanted to explore things by myself, probably build something which I can say that, hey, look, this has got nothing to do with whatever 3 generations were doing. It's still the same. But what happened was that, fashion is something that's very dear to me in general. It's something that I would still, really keep a track of on a day-to-day basis, how the trends are moving and everything. And that interest when it comes to the art, fashion, music, basically just led to the idea of e-commerce. Looking back at it, it was a good learning stint, I think, but it's just a small dot in the entire thing that what we are trying to do, in the sense that it taught me a lot of things, got me that exposure that was supposed to be in place, and equipped me well, basically, to do what BimaKavach is doing now. Because once you fall flat on the face with a bunch of things, you know that what things do not have to be done while you are building your second stint.
I think you also learned a lesson in founder market fit. If you remember that conversation we had a few months ago where you said you were trying to raise capital for Glue Affair, which was your e-com startup. And very quickly you realized what founder market fit is in the hardest way possible. You want to share some of that?
Yeah, absolutely. I mean, founders market fit, I think, and we had this discussion as well that, is such a relevant thing. And probably 2 years, 3 years into it, I realized that, this is the most important thing that will help me actually, build the next thing whenever I get to it. And by the time that realization happened, insurance is not just legacy, but my experience with it in the previous couple of years as just an intermediary agent also helped me figure out this is how it should be done. This is what needs to be done. So the identification of problems became easier. Finding the solutions became easier. I was not probably just, absolutely blank in the market that, okay, this is what needs to be done. So I absolutely believe in the fact that founder market fit is the most important thing. And now when we talk about BimaKavach, I always say that insurance legacy is helping me to a great extent to, set that right tone from day zero itself. While it may not assist me in the day-to-day basis, but there is some groundwork that helps me on a day-to-day basis.
Yeah. And some learnings were definitely fungible, I believe. I think one important area to cover was you did move from Indore to Bangalore. You started hiring your own team and you literally did the 0 to 1 journey right here in Bangalore. That was an important shift for you. And I think secondly, it was also your first exposure to hiring tech teams and actually building out a full-fledged, curated closed marketplace within e-commerce. But for anyone listening in who comes from a non-metro city and is trying to start up, take us through your first few months moving to Bangalore and the run-up to deciding to come to Bangalore, and how easy or difficult was it to hire for tech and to get your business, on the ground up and running?
See, I think when you come from a smaller city, the only primary issue that lies there is that there is less exposure. The know-how is not being trickled so easily on the ground level or the grassroots level when you come from probably Indore or somewhere else. I think 10 years back, it was very different. Now Indore is also moving in a direction where people at least talk the startup language. But 10 years back, it was like absolutely non-existent. Even 5 years back, it was absolutely non-existent. So while there are communities now trying to change that, but the point is that I always recommend to everybody who asks me, even from the city, that even if you're living, let's say in Indore, doesn't matter. But that to and fro between the, larger cities, metros will get you definitely the exposures to understand how things function. Because when you are actually out there trying to build for the entire country, it could be from anywhere. But the talent pool will come from different regions, areas, different walks of life. And sitting in your own cocoon will not let you know what it takes to probably build, a good product or a good company out of that particular area. You have to get out there, learn, and then you can probably just come back and, do that from scratch.
Interesting. And as we know, Glue affair was a short-lived affair. You spent 2.5 years trying to build it out. You quickly realized that e-commerce is a high cash burn business. I think that's another learning for you, that a few $100K in angel money is not going to move the needle significantly. But take us through that thought process of when did you actually realize this is not working out, and what led you to go back to your insurance stronghold and roots?
We couldn't justify the cost of acquisition at the Glue affair. Like even post 2.5 years, we just couldn't do that. Sort of it became evident that this is going to be only a place where we'll have to burn a lot more money to sort of reach a point where we can say that today we will be probably a unit economics positive company, which to me at a very personal level as a founder doesn't fit well with me, doesn't suit well with me. So I probably, come from a background or come from a thought process where it has to be positive from day zero itself. When I sort of figured out that this is going to be either a 20-year journey where probably I don't know the answer if it'll still be, unit economics positive, that's when the tipping point came that this is not an industry where I would want to spend time. Probably I'm not the right person to be in the industry either way. And that's when probably the BimaKavach was eventually born, because, in insurance, it's still fairly doable. It's still easy to sort of get that unit economics positivity from day zero itself versus a lot of other industries. So the inclination was automatically towards the fact that what are the industries where, probably you can make money from day zero, because raising capital was not the intention from day zero. The first idea was to, find the problem and also, fund your home needs as well. Figuring out that can I make money even if we don't raise capital? Can I still build a sustainable zero in business where you can sort of, make money for yourself and your family from day one so that you don't have to rely on external capital? That's what a very initial thought that it started out with. So eventually when the research happened, what needs to be done next? Should you probably go in a job? Should you start a business? The first process was to narrow in on the industries where you could make money literally from day zero. And insurance just became the primary answer to all of the questions that I was asking myself back then.
Yeah, and when we look at BimaKavach, I think one of the things that really interested us was that you were doing 3 things differently. One is you were trying to make online purchases of business insurance as possible. I think MSMEs contribute to 38% of India's GDP. Okay. Yet we know that there is no single business insurance platform that gives you an option of not just generating a quote, but completely buying end-to-end online. So you were solving for online distribution, let's say access, and making it easily available. The second part was, of course, you weren't selling an off-the-shelf product, and you were trying to emulate the MGA model, which is a sophisticated, managing general agent model of the West, to actually co-create and co-customize policies. So you could say it was a curated distribution platform with very customized, specific policies. And finally, the audience was actually MSMEs, SMEs, and small businesses in India. And we know that general insurance penetration has hovered around the 1% mark for over a decade now. And would you think that in that third piece, which is the MSME segment, how do we get that beyond 1%? Do you think it's the largely offline-led distribution model? Because we know more than 50% of insurance distribution in India is your mom and pop offline individual broker agent-led model. So do you think it is the offline distribution that hasn't really, broad-based insurance penetration and made it easily accessible, and therefore penetration is low? Or do you think it's inertia on the side of small business owners themselves who perceive insurance as a cost and therefore don't want to really, secure themselves and possibly not even aware of business losses that are in fact insurable?
I think it's a cumulative problem. It stems from the fact that insurance in general has been looked at a very sunk cost up until a few years ago. Like pandemic has changed a bunch of things. But from the buyer's side, awareness is a huge problem. We as a sector never had a campaign like a mutual funds, whereas we should have had this probably 20 years running straight from probably in the 2000s when we started, talking about privatization in the sector and everything. So as a sector, we have failed to create that awareness around insurance in general. It's probably a cumulative thing as an industry level, which should have been solved or which can still be solved, but nobody's solving it for. So if you don't talk about it day in, day out, you cannot expect the customer to know everything.
To be aware about it.
Yeah. Be aware about it. Exactly. You won't just get up and say that, hey, look, I'm going to buy an insurance policy. So customers don't do that. You have to sort of create that at a very macro level. Secondly, in the problem with the distribution-led models that exist right now, which is primarily offline, paper-driven, tedious, long processes, is that there is a lack of technical knowledge that exists out there, even with the intermediaries. Larger intermediaries, which may have the technical know-how, might not have the cost structures in place to cater to very small customers. And the smaller intermediaries or the regular agents that work with the smaller clients, let's say in the ticket size, they may not have the apt technical knowledge to place the complex business insurance policies. So now as an industry level, neither we are equipping the smaller agents or the distribution intermediaries to sort of, have the technical know-how, because insurers don't have the bandwidth to do that, because even they have a lack of, the technical know-how to an extent where it's only 3 people doing everything for them or 5 people. So you can't expect 5 people to do everything for them day in, day out, including training probably lakhs of agents or thousands of agents that exist out there. So then it's just a chalta hai attitude ki somebody wants a policy, I'll call an agent, he'll get it from somewhere and place the policy. Client doesn't understand, agent doesn't care. And insurers are also basically so tied up with whatever they are doing that their bandwidth is also choked completely. And nobody has tried to sort of get into this and say that, can I solve this entire piece and puzzle? Can I equip the insurer, intermediary, and the client at the same time to sort of solve for all 3 of them together? It's not like it's not doable, but you have to then sort of, move away and take a step back from the fact that I need to distribute and scale up immediately versus a strategy where I can do this in 10 years by sort of getting all of the 3 platforms, the 3 guys involved, intermediary, insurer, and the insured, to a place where everyone is making sense and everyone is sort of, gaining from it. So I think nobody has tried to do this. And until and unless somebody is going to change for this entire problem, it still is going to be continued, and general insurance penetration will be hovering around this 1%, because then you're not changing the perception at a customer level that insurance actually is a great tool to take care of a lot of things. Because customers will feel ki yaar zarurat hai, we'll buy. It's not like they are actually treating it as a risk management tool. They're just treating it as probably something that's somebody asked me to buy it, so I'm buying it. But I don't wake up today and say that, hey, I want to actually secure my business.
Yeah, and you spoke about awareness and the fact that we don't really have a campaign, and it's people, therefore are not even aware of the kind of losses that they could incur, and more importantly, that these losses are in fact insurable. And you rightly said that online distribution can solve for, let's say, accessibility. I think that the third big tangent here is the complexity of the product and the fact that the industry, you could also say that a lack of awareness could also stem from a lot of opaqueness and maybe even mis-selling on part of, distributors, which makes it seem like such an inaccessible product. Like you don't know about it. It's not a top of mind priority for a CEO. There's lack of awareness, there's lack of accessibility because there is no online platform. You have to walk into an offline distributor to even understand if something is insurable or not. And then the product itself is very complex, right? But you're also doing a lot of good work directly with large general insurers in India to solve for this product complexity piece and to try to literally strip the layers to reduce the myriad of terms and conditions that are often associated with general insurance policies. And simplifying the product has also therefore enabled you to make it more affordable, which means the premiums therefore are more affordable to this SME segment. But take us through the almost like 18 to 20 months of effort that went from, you and BimaKavach's side in convincing these general insurers to co-create and customize policies for small businesses in India.
So I'll take a step back and just tell you a little bit about what the process exists in the offline world. Technically, to buy any of these policies, you have to do a lot of to and fro's between yourself, your agent or intermediary broker, and then your insurer, which is a lengthy process in general. And you have to furnish a lot of data just to reach a point where you have to get a quote. Binding policies are a separate thing altogether. And then will be discussions around different quotes that you have received. This could take 15 days, 20 days, 10 days, depending on what the product is, how complex it is, and also at the same time, how forthcoming you are to provide the data. Now, the challenge here lies is for a larger organization with teams in structure, you will have somebody to, figure out that data points and share it with the insurer. But now imagine probably just a 20-member team probably that you are investing in as a first check, where founders will have to do everything in principle. So then expecting a founder to primarily spend time filling out forms and furnishing data is technically not possible. Then even when a VC mandates, let's say a startup that, hey, get a D&O, it's a struggle for them. It's a struggle for them because they have to spend time on it for a product which they genuinely do not understand and then eventually do not care about because they don't know the importance of it. So when we sort of raise this entire point when, small businesses or the young companies, when they have to buy these policies, which there is for, by the way, a latent demand. It's not like probably a BimaKavach is not going to buy a D&O insurance if WaterBridge invests in them. We have to, we will. But when we go to an insurer doesn't have the bandwidth to cater to a BimaKavach in principle or a young company like us. Primarily because that they are saying that I have only 5 underwriters sitting out of my head office. Should I look into a 30,000 proposal or should I look into a 30 lakhs proposal? So the conundrum with them also lies is that they can't make everyone an underwriter. They can't possibly, have that ability that train everyone into probably get into underwriting because that's also a very technical thing to do. So then the priority becomes a 30 lakh proposal. BimaKavach is still waiting probably for 5 days extra because we haven't even received the quote. And then when a physical human is actually sitting on that proposal, he's like, it's just for 30,000. Let's get done with this quickly. Probably just, see 3-4 things and send the quote and get done with it. So that approach is not a problem if you have probably, larger enterprises, because then they are looking into that 30 lakh proposals very meticulously. But a small business either remains uninsured because of the complexities or gets a half-baked product. And when we approached the insurers a couple of, 24 months back, 3 years back with the problem that, can we solve this? Because imagine the number of small businesses that want this policy that exist in country, who may not know but would eventually buy a policy. And can we solve this? Can we automate this? Can we simplify this entire process in some way? Initially, insurers had a lot of vehemence around it and a lot of, pushback around this, saying that then this is taking away from us a lot of things. To a point where I was sitting down with the second, third largest insurers over a dinner table 2 days back with the head of their liability underwriter. And she was just saying that, it's glad that we are doing this together because you take off a lot of burden off us for, underwriting a lot of small proposals that we don't have the bandwidth to do. So that shift in the mindset at the insurers level have also happened. But this was not a very, easy, smooth journey for us. We had to literally knock doors from insurers to insurers saying that, this process has to change for smaller businesses. You may continue to do this for larger proposals or large businesses because the risks are also very dynamic. But this process for small businesses need to change. And a lot of convincing went into it. A lot of, proving them that this can happen, this should happen. And a lot of blood, sweat and tears went into it because when we initially approached all of these guys, we got a no. The initial reaction were just no, because it's very easy to say no. And I think insurance is one of those industries which is very easy to say no to any changes. That's how we function. So just, shaking off these behemoths of their fact that, no, this has to change. They're like, no, we don't want to change this. Coming to a point where it has changed. And the reason I'll tell you why. Because insurers are also losing out on a lot of business now. the latent demand has increased manifold times at a very ground level, grassroots level, and insurers are unable to sort of keep up with it. They are not able to do this basically. And hence, BimaKavach comes into picture and solves for this problem, where we say that let us do this, let us take care of this. How we also did this was, the idea was fairly simple. Basically, you build out these products specifically fine-tuned towards the needs of different sectors of these small businesses, SMEs and MSMEs.
Yeah, and that was actually what I was going to just interrupt you there for a second, because a big reason why insurers have had to cooperate and want to change and even say do a meeting with a startup like BimaKavach is because the very nature of risks, the very nature of doing businesses online today, or even for an SME, the kind of losses that they're incurring today were very different from what they were incurring, say, a decade or 2 decades ago, right? So the very standard definition of a general insurance product itself has changed, right? Today you have, cyber crime, you have errors and omissions. Every filing today is an online filing. You briefly touched upon directors and officers liability, but just the kinds of liabilities that a business can face today have really become sophisticated, evolved, and matured.
And it's evolving by the day.
And it's evolving by the day. It's continuously changing. And the current product suite that general insurers have simply don't meet some of these changing needs. So I think both the insured and the insurer side have really had to wake up to this realization that, hey, your usual fire, property, casualty just doesn't work for my business in 2022 anymore. So just take us to some of those new policies that wouldn't have existed, say, a decade ago. And therefore, businesses are even today open to taking up a policy to cover these business liabilities.
So I'll sort of take even a step back and say that every organization has 3 sets of policies, basically. Primarily employee benefits. Second would have been to secure their assets, probably physical assets like your factories, machineries, automobiles, or whatever. And the third new segment, that the upcoming segment, is the legal liabilities. Larger enterprises have always had these policies because, they have always had this understanding of what liabilities can arise against them. But now imagine, I'll give you an example for a new client that we just, sort of got done with a couple of days ago. It's a 4-man team starting out of Andhra Pradesh, primarily tech services, signing up $1 million contract for one of their new services that they are developing, basically with some company based out of the US. And they were sort of asked to buy these policies by the client to have this in place. The founders got in touch with us. They had a good chat. I explained to them. And then their current turnovers are somewhere around only 25 lakhs, but they spent almost 3 lakh rupees on the insurance. And the guy said at the end of the entire, purchase process and everything, that had this contract not been in place also, these policies just make sense for us. Like nobody ever came and told us that, hey, look, you can actually do X, Y, Z with these policies. And I was so happy to hear that, because like a small team of 4 to 5 guys is actually coming up and saying that we would have anyway bought these policies. Probably not large as limits what the client contract made it by them, but at least some limits. And this is what the shift has happened towards the other set of products, that now India is also thinking about covering their legal liabilities also. We are sort of going from a very reactive approach to a proactive approach to cover ourselves from a lot of these risks, basically, that exist out there. And that shift is on the ground. That shift is real, basically. So these legal liability products are a bunch of them. You can sort of, safeguard against yourselves any legal lawsuits for the directors, founders, the senior officers, the employees. Then if you're building, let's say, out a product for a physical product, like if you're a D2C brand or if you're an FMCG company, any product liabilities that arise against you, like if you're, probably selling like a vitamin C serum and somebody consumes it and something happens on their skin, they can sort of hold you responsible for this. And this is a very fairly common thing that exists out there. So product liability insurance exists for that. If you're a tech services company or a tech SaaS startup, your product defaults or your tech failures can lead to losses, eventually clients coming and holding you responsible. So there is an errors and omissions policy. And the 2 important products that have sort of shown a lot of interest in the last 3 years globally, not just India, are cyber insurance. Cyber frauds have increased through the roof. It's unbelievable what's happening out there. And globally, this product has seen the fastest change that exists out there. in the last 3 years compared to any other insurance product that has ever in the last 20 years. And there is an interesting product, which is a fraud policy. Any sorts of frauds that happen against you can be covered against basically, and covering you for financial losses and crime policies. And a bunch of other products then exist at the industry level, like probably a pharma guy would buy like a clinical trial policy and all of those other things. But now we as a country, we as, small businesses have started looking into these products and understanding. And, a lot of mythbusters are also coming from the intermediaries who are involved in this. These are not expensive policies. These are not very tedious anymore if you, let's say, use a BimaKavach to buy these policies. It's just a function of time where this will blow out of proportions and everyone and anyone will be buying these policies. But there is a product out there literally that exists to cover all of your legal reasons and liabilities, just like how it exists probably for your health insurance and just like how it exists for probably your factory.
Yeah, it's interesting because as much as we've digitized, you spoke about cybercrime and online fraud, and we know that between 2022 and 2021, UPI fraud has increased 4.5x, credit card, debit card fraud has increased 3x, internet banking fraud has increased like 4x.
Absolutely.
And these are, like real increases in cybercrime complaints in India. And we know that many of these SMEs actually suffer and incur losses, and the recovery rate for these losses is, hovering around 20-30%. So you actually end up incurring a real loss if you're uninsured, so to speak.
So if you look at the Cisco report from last year, it says that almost 2 out of 3 SMEs have had some cyber incident, if not potential loss, but they have had some cyber incident across the country. It's that prevalent now.
Yeah.
And nobody is bereft of it. Technically, even manufacturers have a lot of cyber incidents. It's not just the tech companies. The general assumption is that probably fintech is the worst hit, but fintech still have better guardrails. It's the manufacturers and smaller businesses losing out more in terms of, money compared to probably a fintech company or somebody else.
Yeah. And you briefly touched upon regulatory tailwinds, right? And just increased consumer awareness. And you gave the vitamin C serum example. But of course, we have the Consumer Protection Act that has specific implications relating to product liability and E&O insurances. SEBI has mandated the top 1,000 listed entities to now have like D&O. Independent directors have been taking D&O. The GDPR inspired
now a recommendation in the Companies Act as well.
Yeah,
that you should be having a D&O.
Absolutely,
policy.
And then we have the draft data protection bill, which will also support this need for businesses to take insurance. But just take us to the regulatory landscape. In the introduction, we spoke about how you said that from your great-grandfather to your grandfather to your father, you felt like nothing has changed in literally decades working in these large insurance, right? What do you think the regulatory environment around general insurance has been like in the last few years?
I think it's changing drastically now, and it's changing. IRDA wants it to change literally by the day, because suddenly the regulator has realized that, hey, look, we have not done much in the last few years of our existence. And if we don't do much now, sort of the industry will go non-relevant or just stagnate after a point in time. And I think they've also learned from probably the banking industry, because there are radical changes that have happened from the way UPI has come into picture, and a bunch of things that have happened, at least from the payment side, lending side, and a bunch of things. So the regulator has this realization that insurance is a backbone of any economy, in a way, just like how other financial institutions or sectors exist. And now, since the regulator has sort of come to terms with the fact that if we don't do this now, then it will be too late probably doing it if we don't, probably kickstart this. So not just they are planning it, but they're executing it within that month. So if, let's say, the regulator wants something to change, they're literally doing it in real time, that probably on November 1st, they'll say something, and by December 15th, they'll execute it. And I think it's a very surprising thing for a lot of us who come from this background to see that regulator is just changing things so quickly. It's suddenly ever evolving. It went from, technically, I always say this, it went from never evolving to sort of ever evolving suddenly, because regulator is doing that. And that sort of boils down to the fact because the government or the businesses in general want this to happen. So the way Indian economy is moving, IRDA had to do this. They had no option. And there was also immense pressure from probably the top, government level scenarios that if you have to do this, you don't have an option anymore. And that's what's changing. So while IRDA has to work in, tandem with the other regulators in principle. That has made them move their thing and shift very quickly. But overall, I think what is also changing now is that compliances are getting stronger for all of us, me, you, and a bunch of other businesses. And that eventually sort of translates into the need of, insurance products more stronger than ever. Because as your economy grows and as you become more, heavy on compliances, and while you have to do that, the margins of errors also increase because you are suddenly in an environment where you also can't grasp and you have to sort of be compliant with an XYZ thing. And that's where insurance sort of fills those gaps. And that's where the identification of these gaps becomes even more relevant. And that's why I say that process innovation is one thing, but then product innovation also comes into picture. Because while the landscape of the businesses change, you have to not just evolve for the process, which bunch of things have happened in the last few years, but now is the time to innovate on the product side from the insurers also. And I think both regulator and the central ministry is sort of, pushing on that, issuing more licenses, getting more insurance companies to do that.
It's interesting that recently I read an article in the TOI that said that 46% of Indian consumers are actually stuck with high value products. Nearly 60% of them have raised complaints with the brand they purchased it from and have not been able to resolve it. And actually 3% even won in consumer courts and took these brands to courts. And an overwhelming 94%, I remember, of us felt that the government really needs to take some action to protect consumers against brands that are selling defective products. And another article interestingly spoke about how ICICI Lombard mentioned recently that sale of their public product liability insurance has actually seen a 20% growth year on year. And more interestingly, claims ratios have exceeded 60%. So I think this really goes to tell you, how the nature of products itself have evolved, but how also consumers are being more aware. So largely driven by these regulatory tailwinds, Consumer Protection Act, awareness from the consumer side that, I can actually take legal action, or I should be able to, fight this with the brand. But also brands kind of acknowledging that you can't merely ignore and fight back consumer complaints, but you much rather, give your consumers better customer service and instead insure yourself. And you spoke about that Andhra example of the small business owner who said, I would take insurance irrespective of whether my customer contract warranted it or not. And you spoke about the reason insurers are willing to change is because of the changing business needs of today. But one part I'd like to touch upon is the fact that by actually simplifying terms and conditions and by reducing the number of covers, extensions, inclusions, exclusion, and that's part of the product simplification process, it has also led to more affordable premiums, and therefore the affordability of these products, the price at which today you can take a DNO, you can take a product liability is significantly lower than what you could a few years ago. But take us to an example of what percentage price drop are we actually talking about, and therefore how affordable is it to actually pick up some of these insurance products?
See, there are two parts to this, basically. So the general assumption is that insurance has to be very cheap because we are a price sensitive market. To make it very cheap, because the industry is so competitive, probably you will rely on a bunch of things cutting in terms of, coverages and adding more exclusions to make it more cheap. That's not the correct underwriting way in principle, because again, you're selling a product to a customer which he may not be able to use when the actual need arises. And then you sort of, then get into the cycle of the fact that everyone then complains that insurance is of no use at the end of the day. So that is not the best way, or I would say that's the most horrible way to reduce the price.
And it comes back to that mis-selling point, right? Like you just missold something. Yeah.
Because then you made it so irrelevant in terms of the product.
If you can't make a claim, then what's the point of taking the insurance?
And then I can literally then sell it for free.
Yeah.
Which doesn't make sense. Which is a very common practice. But can you then, what we are taking as an approach is, can you make it more relevant? Identify what is actually needed for that particular client and price it correctly. You neither have added any, nonsense coverages to it, which that client doesn't need. You have neither omitted basically, a relevant coverage, so just to make it cheap, but price it very correctly. And I think the entire industry should probably strive for that in principle. That can you sort of find that, fit in the middle where you don't have to missell but still make it affordable. And with better underwriting, with norms basically, you should be able to do that, because that's what underwriting means, that you have to price it correctly and provide the best solution to your existing or your new client that exists out there. It's easier said than done technically, because it just sounds very good on the paper or probably theoretically. In real time, a lot of scenarios happen which you will never have accounted for. Neither the insurance company has, neither probably an intermediary has, and neither the client has who is buying these policies. So it is a very ever-evolving process. So what we at BimaKavach are primarily striving for also is that there should be a very specific team who does this day in, day out. You understand this from whatever has happened retrospectively and keep planning for the future. So you then might as well say that what is then the role of actuarials in this case? So actuarials and underwriters have to sit literally together, and that intelligence also goes from us building into our own product. That what is it that takes? See, at an insurer level, the problem that is a very fundamental, and I'm not going to blame them on this, but this is how it's designed, is that they take a very high level, broad level picture around this. But then if I say, and if I come in that, hey, look, let me build this specifically for a chemical industry that exists probably for a turnover between 0 to 50 crores, identify a bunch of problems from state to state, because that might also differ, and then build it, all of it, into a product that makes sense. So if it's a coastal region chemicals factory versus, let's say, a central region chemicals factory, is there something that can change into their legal liability propositions? If it does, then factor in. If it doesn't, then well and good. You can sort of standardize it. But then you take one more step back. Then will the chemicals company and a SaaS sector, let's say from probably Maharashtra, function similarly? The answer is the absolute no. So you cannot give them a same D&O, and that's where we come in and we say that, let me sit down with these, probably industry. Let me sit down with probably hundreds of companies. Let me figure out the threat actors. Let me put that back into the underwriting model, push it back to the insurer that, hey, look, this is what's happening on a ground level. You have an information at a very macro level. I am giving you at a very micro level. Let's factor this in. Let's design the product accordingly and then price it accordingly. So once you take this approach, the pricings become equitable, because then you're able to narrow down on particularly for that industry, for that particular sort of a client, and then you can push those discounts back to the clients. So it's not just a way to reduce premiums, but it's a way of basically better underwriting that makes sense for everyone, because that X amount then also has to turn into profits for the insurer as well.
Yeah. And I think renewals and retentions are a big part of this. Insurance is not just about selling that policy for the first time, as we know that it when you actually have to make a claim, and the level of customer service and dedicated customer service and helping a business actually recover that insurance claim is a key part to ensuring that customers stick with you and renew and retain with you. So it's not just as simple as just selling a policy online, but building out that claim servicing team, that customer success team that ensures that to the hardest part of making a claim and receiving your insurance check, that you're also servicing your customer through and through.
It's a very interesting thing, because the general assumption specifically in the industry or in the market is that you don't get any legal liability claims. And just to throw some light on it, one of the, large insurers who deals with these sort of products on day in, day out was just mentioning to us just a couple of days back, in the last FY, they've had almost 2,000 plus claims. This includes a lot of product liability claims and errors and omissions tech PI claim. So, and imagine sitting on the fact that not everyone is buying these policy. You still have 2,000 plus legal claims happening in one FY when not everyone is still buying these policies. Small businesses are not buying these policies. The shift is there. It's just under the wraps. When you go from probably insuring probably more startups, more SMEs, more micro businesses, that complaints, the figure that you were mentioning, that there are an X number of complaints, is only going to increase. We are sort of moving towards a very Western, dynamics where these complaints, these claims are going to be common because the consumer is getting aware. Consumer knows his rights, and consumer is not afraid of anymore dragging probably a product or a tech company to the court saying that you made a mistake, I want my money back. And that's what basically is happening on the ground. It's already there. It's just so unnoticed because that number of 2000 claims also came as sort of a surprise to me that 2000 is not a small number from these particular products, considering the fact that not many people are buying it. And that's where then the customer success and everything also comes into the picture, that if that is the number going to increase, are intermediaries and our insurers equipped to handle these many claims? Because even our assumption, probably 5 years back, and if you talk to any large insurer, they would say that, hey, we never assumed that a cyber fraud would, occur at the manufacturer's level. So were they equipped when pandemic happened? The answer is no. As an industry, are the intermediaries equipped to handle all of these claims and complaints? The answer is we have to start building for the future. We have to start looking into these facts that these things are going to increase. And this is where, again, then BimaKavach sort of comes into the picture and says that while everyone's probably solving for motor, health, or something else, let us build out in this sector and let us, solve for this complex problem and probably build for those 5 years and 10 years where this segment is going to ever increase.
Yeah, it's interesting that the number of physical insurance offices, purely for the general insurance bucket, has stayed at the same 11,000 mark for almost 5-7 years now. But if you actually look at the number of people searching online for insurance, this has significantly gone up. And interestingly, 40% of these actually come from beyond the metros for that SME, MSME segment.
I'll tell you why. This is a very interesting thing. Basically, coming from a small city, I can very relate to it very closely. See, imagine a guy who's sitting out of a small city in, let's say, probably MP, not even Indore and Bhopal. Let's go to probably one step down to Ratlam and Gwalior. You are running a business out of these cities. You have probably a small tech services company of 15-20 people and you want to buy these insurances. Your local agent and your local branch is not equipped to do this. So where will you go? Google is going to be your best friend. So I personally feel that while you're sitting out of a Bangalore or a Bombay office, you may have good offline players to cater to this. But that division, when we talk about sort of India and Bharat story, so Bharat doesn't have any, good offline players to cater to this. And that boils down to the fact that they were anyway going to go online. Every one of us coming out of Bharat is equipped to do that, to go on Google, search and buy these policies. And this is what makes it even more interesting, that they sort of now rely more on buying online or finding these things online versus a large player sitting out of Bangalore who will be like, oh, I know 10 people. I'll call him over to my office, scout for, probably one guy and give it to them.
Yeah. And as you rightly said with the claim servicing as well, if you see liability bucket alone, the gross incurred claims has literally gone up from 24% 10 years ago to now almost 50%. So clearly insurers are going to have to work with startups like BimaKavach in order to not just sell, but also to ensure that claims are being processed on time and that there's also customer service through that entire claims processing.
It's largely outsourced at this point in time because none of us were equipped to do this basically. And even the insurers did not think about this at a very, macro level that this can happen. Nobody had accounted for that the liability segment will go from probably what it is now. And it's growing at almost 30% plus. Currently, it's at a 32% year-on-year growth, which is pretty phenomenal for the sector. So nobody had accounted for it. Nobody knew that this could happen so quickly. Pandemic did help into it, but this just happened literally in the last 3 years.
Yeah.
There were tailwinds, but it literally shifted completely.
Yeah. And I think I always like to look at even a young startup. You've just raised a 2 million, your first institutional round led by us. And I always ask founders, and one of my favorite questions during a founder pitch is to actually look at the current org chart and, the future org chart. We've done this for the two of us. So, who are you going to hire? And I think it's a very interesting way. One thing is a founder telling you that we're tech-led and we're not mis-selling and we're not, sales agent-led. And the other thing is to actually look at the org chart and see who are the first 10 hires, who are the first 20 hires. And, you learn a lot from who those first 20 hires and which competencies, skill sets and departments they're in. And an interesting thing for BimaKavach is exactly that the sales team is in fact the smallest and you have the most number of people in underwriting, actuaries to help you with co-creating and customizing these products with the insurers. And then you have folks in, tech and digital that are actually helping you build out the online platform. And then the third theme is that awareness bucket that we spoke about, which is the education and like the content and marketing team that helps with SME awareness and education about what is cybercrime, what is DNO, what is product liability. So the way in which you've even built the org speaks volumes about how we are seeing this not just as pure online distribution play, but also process and product innovation with the insurers, and more importantly, not mis-selling and therefore educating the audience, which in your case is the SME audience, and making them aware about the types of insurance products that are available. I want to ask you a little bit of a trick question here and ask you, in these three buckets, which is say product innovation, the middle piece, which is the tech-led distribution, and the third piece, which is awareness and education, which one do you think is going to be the hardest to crack?
Product innovation takes a lot of effort. While I always say that because you don't have good talent in the industry right now, what I always talk about is there is this latent fear in the entire industry, not just at our end, that do insurance as a sector, will we have the right sort of people down the line to cater to how the entire requirement set is coming from the demand side? Will we have the right sort of people to build for the future in this sector? And that translates into at our end at the product innovation side. Will we be able to get that, almost 100 plus people, let's say in due course of time, or 10 plus people, whatever the number is, to sort of, figure out the pain points continually to develop on the product side. So product innovation, which was primarily initially was just led by me. Being bootstrapped, we didn't have any options, as such to probably have like 10 plus people. But then can you have like 5 more me's to just do that day in, day out, or you can have 5 more better me's to sort of who understand this even better than I do to do this day in, day out. And then also at the same time, but when it translates into the process innovation side or the awareness side as well, you can hire a bunch of people who sort of, are very good at marketing. But will they be passionate equally about, sort of creating awareness? Insurance is the only thing that we look at in principle, because it's very easy to get bored in our sector. It's very, fall into the trap of, oh, this is such a boring product. So even if you look at the product approach that we have taken, even if you go to the platform, we created like a mascot around it. We're sort of, not trying to be extremely 30-year-old approach, which probably is a very fear-inducing market approach. That if you don't do this, you will probably, end up in jail, or if you don't do this, your son, once you are not there, will never have the education to do this. We're trying to sort of bring some element of, modern day awareness plus a little bit of fun to it, so that insurance doesn't come across as a product which is sort of boring. So that's why we always, when we hire for the marketing team, we always say that, do you have in you basically that you take a boring sector and make it fun? But product innovation will continue to be the most challenging thing to build across, because that is also something, the most critical piece in the entire thing.
Yeah. No, interesting that you said that you're looking for people who could take something as boring as insurance and make it exciting for customers. On that note, just a final question, Tejas, you spoke about, the fact that people get bored easily with insurance. And one of the things we look at always with founders is, apart from founder market fit that we touched about earlier, is actually staying power, because fundamentally you're in this for at least a decade or more, right? Through our conversation, it's very evident about not just your deep understanding, but also your passion to want to change this and make insurance more accessible, affordable to SMEs in India. But just a final question on, why do you believe your time is now? And we're on the cusp of 2023. And what are you most excited about for next year?
I think insurance is late to the party, and it's good that at least it's in the party now, to sort of, change things around for itself as a sector. It's happening globally, because insurance was late to the party even globally as well. The West also, it was just 5 years younger to the party that we are having right now in the current system. But they were also slow to adapt. They were also slow to change. And boils down to the fact, what I'm really excited about is that are really interesting things happening. And primarily pushed by the regulator, that's opening a lot of doors for a lot of, insurtechs that are going around in the sector and trying to change on different sectors. So I feel that it has to happen now. If it doesn't happen now for all of us, it won't happen probably 10 years down the line, because 10 years down the line, you will be a very matured market when it comes to insurance, and probably one of the largest that exists out there, and pretty much in line with what probably a Chinese or a European or an American market stands up today's time. We will reach there eventually. That's the hypothesis. What I'm really excited about is how the regulator opens up doors for a lot of us in the ways that it's trying to do. Be it getting more insurers, be it changing the landscape, be it, letting these small changes where use and file comes into picture, where you're allowed to file the product later, but use it first in the market. These radical but small shifts are genuinely steering the direction of the entire industry. And when I sit down with the old folks from the industry who spend like probably 30 years plus, including, let's say, my family, they are also, very excited about these changes. They are, actually looking forward because they have seen this day in, day out. So for them also, it sort of, is a now bright shining kid suddenly. In general, I'm more excited about also seeing a lot of insurtechs popping from different sectors, probably solving for, different regions. I haven't seen much happening in the life sector. So probably a lot of life insurance companies should be, popping up day in, day out. And that is one thing that I'm really looking forward to. How these sectors change based on all of us cumulative effort, what we are trying to build.
Awesome. Fantastic. Thank you so much for coming over to our little podcast studio and sharing your journey and what excites you about building BimaKavach. Really, really enjoyed this conversation as always, Tejas. Thank you so much for doing this. Cheers.
Cheers. Bye.
Thank you for listening to That One Idea, a podcast series produced by WaterBridge Ventures, recorded at our studio in Bangalore. WaterBridge Ventures is a leading early-stage VC fund in India, partnering with mission-oriented founders building game-changing businesses. The fund invests up to $3 million across seed to Series A rounds. With over 32 investments in 5 years, WaterBridge has backed leading companies like MagicPin, Unacademy, Doubtnut, Chalo, and City Mall, among many others. With over $250 million in assets under management, WaterBridge also runs India's leading seed investment program called Fast Forward. The Fast Forward program invests up to $1 million in seed stage companies with a 7-day turnaround time to all founder pitches. Head to waterbridge.vc to learn more.